Welcome to the Pump and Dump channel. Today I want to make a video about Scorpio Tankers. They are in the shipping industry. They, for the most part, transport crude oil from oil producers to refineries. Their fleet comprises of 109 ships that they own outright. The vessel types are Handymaxes, MRs, LR1s and LR2s. The age is relatively young of their fleet. The ships have been built between 2012 and 2018. Then there is another section here of ships that they have sold and are leasing back. We can see that the daily lease expenses is given in this column here. One thing to note about the age is, of course, they are relatively young. These ships have a useful economic lifetime of about 25 years. Well, unless they sink, of course, then it's less, but that's the assumption that we're going to use. When we get to valuing them, key thing to consider here is that we can see that the actual cash flow from the ships that they are sold and are leasing back is negative. This comes from the day rate adjusted for the operating expenses, and then deducting the day rate gives them a negative cash flow. The benefit, of course, from selling the vessels is that they get the cash, and they need sometimes to use the cash for repaying their maturities or for finishing to making a payment on construction of a vessel. So before I get into looking at any fair value for this stock, I just want to remind everyone that all the information that I provide here is just that. It's for informational purposes only, and the valuation is based on my opinion. There are several inaccuracies in my assessment and my analysis that people should be aware of, and I will go over some of them as well as we go through it. So in terms of fair value, I use a 5% discount rate. Key for this is that the shipping industry is very predictable in terms of what a ship can do. Operationally, it's not like a mine where you have a hole in the ground and you have dug and drilled in a few locations, and you then kind of guesstimate that you contain so and so much in terms of resources. But shipping is very predictable operationally, so 5% discount rate is what is used for most companies in terms of discounting their cash flows. The fleet I assessed to be worth $841 million. The ones, the ships that they own outright, those 109. Then for the lease back, I get a negative net present value of $215 million. Then if we look at the assets, we can see here that the cash position is 600 million. The current portion of the long-term debt and the lease that they have to repay this year is $412 million. There have been some developments here this year in March and February. Of course, I'm using the annual report of 2018 here. And this is relating to their debt. And one thing to note is that when they repay this debt or settle the debt, then the annual interest expense that I have here is going to be less, and therefore that's going to add value to the actual stock. Now, the reason I did not include it is because most of the valuations and modeling is done at the beginning of the year when investment managers decide to invest in a stock, and for the most part, my experience, because they have like 50 or so stocks in these large portfolios, like in the mutual fund industry, they have very large portfolios, sometimes 100 securities. They can't keep up to date with it, especially when there's like one chief guy deciding where to put things. So the actual news here, I've not included it in my valuation model. This is one of the key things to remember, that this is not included in my valuation, and therefore my valuation is wrong. But in terms of how the stock market trades, it does not really trade on what is actually there, but it trades upon what the people with the stock and the money decide it should be trading at. So yeah. What can I talk about now? Next thing is the total debt here, 2.9 billion. That's very significant. One thing to note in the shipping industry is that a lot of operators, they issue preferred shares rather than debt, and the preferred shares have higher dividend yields. However, one thing to note is that when these companies issue preferred shares, is that they cannot be bankrupted by the people who are buying the preferred shares, because they are not they are not secured debt, and therefore they cannot really have an impact on the company's ability to stay in business. Next thing, the day rates. These are the current day rates that I found for the given period of time right now. The costs here, they are not accurate in terms of the being applicable to the individual vessel types. I could calculate them, but usually what people do is they just, when they're analyzing, is they take the totals that are giving for operating the vessels, the expenses for the voyages, the charter hires, the general administrative expense, and then they just they do it like I did here. They take it pro rata, and then they put it against the individual classes here. So they say that an LR2 costs this much because it's given the daily operating expenses and the financing expenses coming out to be this amount here. In relation to that, we'll give them this percentage, and then they just multiply this percentage by the day rates, and then they come up with what they consider to be the cash flow generated from these assets. And that will then give them these tables here, and that will give them this net present value. So going back to the start price here, we can see it's at 26.29 as of Friday the 30th of August. Why is my fair value completely different? Is in my research and estimation related to the discount rate. The sentiment in shipping is very bullish. If we look at the year-to-date performance, we can see that it was as low as 14.80 on the 52-week period, or 16 or 15.59 here in February, and that's kind of close to what I have here. But one thing to remember is that day rates change, and day rates were probably different at this point in time. Anyway, key thing to think about is the legislation around IMO 2020, which dictates that sulfur emissions have to be reduced by ships. The way to achieve that is either installing scrubbers or by using low sulfur fuel. Now, because Scorpio Tankers fleet is so young, it makes sense to install the scrubbers because they will save over the lifetime in terms of the fuel costs that they use, and that will kind of be accretive to their accounts. So of course, high sulfur fuel has a lower price than low sulfur fuel. It's about $200 per ton, so it is, it's meaningful. But for older vessels, they will not install scrubbers because the installation of scrubbers and using high sulfur fuel is going to work out to be more expensive than using low sulfur fuel. So older vessels, they are not for the scrubbers. The operators who own older vessels, they often say that scrubbers are bad for the environment, and that using low sulfur fuel is much better than using scrubbers. And the people with the younger vessels like Scorpio Tankers will say that scrubbers are better because they reduce the sulfur emissions. And in terms of financials, we can say that there is this, well, there was, at least from what I looked up, lots of news about operators preferring ships with scrubbers. I can only attribute that to some charterers thinking that they have to charter ships with scrubbers because ships without scrubbers won't be able to operate under IMO 2020. There's often misconceptions that lead to distortions in the marketplace, and therefore there are a lot of charterers who actually are paying a premium for for operating and chartering a vessel with scrubbers. So to reconcile this current price here, the only way I found was to use a 0% discount rate to get to 25.35, which is close to the lower range, and a negative 0.5% discount rate, which is kind of what the German bond is yielding. So you can come up with this number here, which is close to this one, the upper range, to be what the stock is trading upon. And the only way to come up with using these insane discount rates is that it's very speculative and extremely bullish sentiment in the shipping industry around the IMO 2020 legislation. So so that's kind of what is happening from my assessment. In terms of like a value investment, there's no margin of safety. The discount rate is a no. Owning this long term would not yield anything if day rates stay consistent, of course. So the bullish sentiment is saying that, well, day rates are going to continue higher, and why shouldn't they? Because historically there was super high in like 2006 to 2008, I guess it was, and they think that, why can't charter rates keep going up? Because if you just imply, for example, them going up by, let's say, like by 30%, right? You can put in these higher rates, and then you could argue that actually the net present value should be above $100 per share with these insane discount rates, and even with a 5% discount rate it would be 63, which is about 2.5 times almost as much as it is now. So there is this argument to be considered that day rates are very volatile and could rise significantly, and therefore on a speculative basis you can see how this can keep going higher, even though on a value basis over the long term it should not, if rates stay consistent. And over the long term, daily charters, they hover around what the operating costs are, with a small added percentage to the operating costs, and therefore I just don't see a reason to own this stock at this point in time. It's basically gambling. It's not value investing by any stretch of the imagination. Of course, if you are like deep into the research and you conclude that rates will go up over the next 3 months to 6 months, then you absolutely can have a reason to buy this stock. So yeah, I'm going to leave it with that. Remember that I use averages here, and my cost basis are not necessarily accurate, and therefore there is some flaw in the analysis I came up with. However, this is how I see it. This is how I would analyze and decide whether I would buy or not buy a security. So just going to leave it with that. You can leave a comment as to whether you think that I have something else wrong, or if you want to agree, you can just put a comment, and subscribe if you want to be notified for any other videos that I might make in the future. Probably will. Kind of liking doing this. So yeah, going to leave it with that. So have a good day, and don't go all in on this stock.